Trump's tariffs are still causing a lot of turmoil in financial markets, and it feels like almost every day there's another headline triggering recession worries among investors. It's the week ahead at xan.com. Thanks for joining us. I'm Cristina Marujos. With me today is our senior market analyst, Haralambos Pissouros. Haralambos, just yesterday, Fed Chair Jerome Powell gave a rather gloomy warning that Trump's tariffs may upset the inflation growth balance, and Wall Street added to its losses after that statement. What can this tell us about risk sentiment right now?
Hello, Christina. It tells us that risk sentiment remains subdued, and that investors remain fearful about a potential recession this year, despite Trump's 3-month delay on reciprocal tariffs and the exception on some electronics imported from China. This is not only evident by the retreat on Wall Street, but by the further decline in the US dollar, which is raising questions about the currency's sustainability as the world's reserve currency. And also, it is evident by the rally in safe havens like the yen, the Swiss franc, and of course gold, which hit a fresh record high yesterday. Now, despite their recovery this week, Treasuries are sold again today in a sign that investors are dampening US assets altogether. Just last week, there has been a massive sell-off of US Treasuries, and with several auctions on next week's agenda, it will be interesting to see whether demand will remain subdued or whether it will show some sort of improvement.
Now, let's stay in the United States and have a look at Wall Street. The upcoming week holds some important earnings releases. Tesla and Alphabet are due to report their Q1 earnings on Tuesday and Thursday, respectively. Could they potentially inject any optimism in financial markets?
They could do so if the numbers are good, but I think that the impact will be temporary. As we saw, investors are more concerned about the economic impact of Trump's trade policies, and first quarter earnings will not reflect any damage from the latest tariff salvo. We may get some hints when the firms announce projections and future plans, but I believe that earnings results now are unlikely to prove game changers. As we said, investors remain concerned about the recession, and this is evident not only by the market reaction, but also by the fact that according to Fed Fund futures, investors are expecting around 90 basis points worth of rate cuts by the Fed this year. Having said that, though, a recession has not been fully priced in yet. Even JP Morgan, which is considered one of the most pessimistic commercial banks, is assigning a 60% probability of a recession. Therefore, with the agenda appearing very light in terms of economic releases and data next week, investors will keep their gaze locked on news surrounding tariffs, and there may be more to digest should the trade landscape worsen. Not only could US-China tensions intensify for any reason, we've seen Trump being unpredicted, but he could also withdraw the 3-month delay, which could add pressure on US allies to deal with a new reality. This could weigh further on Wall Street and also on the US dollar, and it could allow safe havens to gain more, of course.
Well, speaking of safe havens and, of course, the Forex market, let's turn to the data front now, Haralambos. Flash PMIs for April from the Eurozone, UK, and the US are likely to be the upcoming week's highlights. So how could the Forex market respond to these data sets?
Getting the ball rolling with the Eurozone, business activity grew at its fastest pace in 7 months in March and could gain more traction in the coming months due to the optimism that massive spending for infrastructure and defense in Germany could turn Europe's economic fortunes around. Having said that, though, April was also faced with increasing uncertainty and volatility due to the changing tariff dynamics. And in my opinion, this poses some downside risks as businesses may have turned a bit more cautious this month. So, weaker than expected numbers could result in a pullback in the euro, but whether this will signal the end of its prevailing rally remains doubtful. Why? Because investors are already penciling in 85 basis points worth of rate cuts by the ECB this year, which makes it very difficult for the ECB to turn even more dovish than that. What's more, the Eurozone holds a decent percentage of foreign-owned US assets, and thus when investors around the globe are dampening US assets, some of them are converted back to euros. Now in the UK, a quarter-point rate cut is largely expected at the next Bank of England decision, and so improving PMIs are unlikely to change those expectations. They could though prompt investors to scale back their bets for the remainder of the year, their rate cut bets for the rest of the year, which could thereby help somewhat the pound. In the US, the PMIs could also attract special attention, as with the Atlanta Fed GDP now model pointing to a 2.4% contraction for the first quarter of 2025. Market participants will be eager to find out how business activity entered the second quarter.
And finally, Haralambos will be getting the Tokyo CPI numbers on Friday. Although rate hike expectations by the Bank of Japan have been scaled back in this tariff-related turmoil, could this report offer the yen any support?
Yes, indeed. Bets that the Bank of Japan will proceed with at least one more quarter point rate hike this year have been scaled back due to the tariff turbulence. Traders are now penciling in only 10 basis points worth of rate increases by December. In my opinion, even if the CPI data reveals some acceleration, it is very doubtful that the market will return to its pre-tariff state, when there was an 80% chance of a quarter point Bank of Japan hike in June. Yet, the yen seems to be enjoying some safe haven inflows. So even if the CPIs do not change much the Bank of Japan expectations, I think that the yen could continue enjoying some safe haven inflows. We've already seen dollar yen dropping to its lowest level since September.
Haralambos, thanks so much. This was The Week Ahead. Thanks for watching at xn.com.